Well, hello everyone. Welcome to Getting Started with Technical Analysis. Today we are talking triangles. And if I had one of those little musical triangles, I'd be tinging it now just for dramatic effect. But alas, I have a set of drumsticks and a piano, but no triangles. So we're going to talk about ascending triangles, descending triangles, and symmetrical triangles today, and what those price patterns can indicate for us as investors and traders. So first, we're going to look at how to recognize those on the charts, and then we're going to have a conversation around what a trader might choose to do when they see one. My name is Barbara Armstrong. I'm a coach with Schwab. And if you are not following me in the land of X, I invite you to do so. I've got Connie Hill with us riding shotgun in the chat. She's a friend and a fellow coach, and it's great to have her on board. She's posting a lot of great content on X as well. So I encourage you to follow Connie Hill CS. So, and know that there's nothing like the real thing. If somebody reaches out to you and offers you a Bitcoin or a crypto deal, or offers to trade your account on your behalf, if you'll just share your login information, please do not do any of that. Or private education for a fee. These are all scammers and ne'er-do-wells. It's not Connie and it's not me. Okay, so know that as we look at, and I've got a pile of patterns for us to look at today, of triangle patterns, know that everything that we look at today is for example purposes only, none of it to be construed as a recommendation. We are going to look at all of these examples on the Thinkorswim Paper Money platform, on the Thinkorswim desktop. And know that if we look at an options strategy, and we may not do that today, but if we do, know that options carry a high level of risk and are not suitable to all investors. So if you are here for the very first time, feel free to type a greeting into the chat so that we can welcome you. I see that we do have some newcomers here. So to Larry and all the other newcomers, welcome. We're glad you're here. And then to the usual suspects, thank you for helping bring this class to life, to Chuck and Life in the Fast Lane and Krishna and Riceberg and Scott, who's tuning in from Maui, and Greg and Richard and David and the rest of the gang. So glad to see so many familiar faces. So I've designed this to be taught in about a 9-week rotation. And then on occasion, we'll throw in kind of a bonus here or there. We did one on Fibonacci's, and we did one on diagonal resistance breakouts in the last go round. But right now, we're focusing today on pennants and triangles, which is number 6 in our rotation. And then next week, we'll look at channels and reversal patterns, which will include head and shoulders and double bottoms and cup and handle patterns and all of those. And if you're not familiar with those, well, you'll want to be sure to come back. And often, Connie and I are posting these types of patterns on X as well. So you'll want to be sure to check that out. Okay, so we're going to look at what triangle patterns are today. We're going to look at several different examples of both, of ascending triangles, descending triangles, and symmetrical triangles. We're going to look at a bunch of those on the charts. And then we're going to look at what we might do with that, including, placing example trades. And know that price patterns occur because we've got different horizontal and diagonal support and resistance lines that help create these different patterns. And, and each pattern has a unique construction that forms over a given time frame. And that time frame, it can be short. So it can be hours to days long, it can be days to weeks long, or it can, even if you're looking at, say, a 5-year weekly chart, it can be weeks to months long. So we can have these triangle patterns appear in any time frame. And then one of the things we're going to discuss is how, we look to these patterns for potential entry and exit signals. And how we might use these to help us establish a target. And triangle patterns give us all of those things. And so a triangle pattern can be either bullish or bearish. And, if we're looking at a daily chart, although it can be any time frame, when we're looking at a daily chart, it typically needs at least a month to form. And, what we're looking for is these lines to start getting closer together, our resistance line and our support line. And we're looking for it to break either to the upside or the downside. Now, when we have something that has been a stock that's been uptrending or an index, just let me get my drawing tools going here. So when we see something that's been uptrending, and then we see this consolidation type pattern, it's kind of like a coiling. We call this a symmetrical triangle because we have both lower highs and higher lows occurring at the same time. And the expectation is that this is a consolidation, but the expectation is often for the trend to continue. Now, that doesn't always happen. And so a patient trader or a more conservative trader might say, well, my expectation is that when this is finished coiling up, and it may come back down here, and then break out, but it could also break out to the downside. And so somebody exercising patience will wait for this breakout, and then sometimes it will break out and come back to retest and then go on its way. Now, with this particular chart, it broke out and it had only one down day, which was the day following the breakout, and then it took off. And sometimes that's all you get, is that one day pullback. And then sometimes it might break out. So you could have a triangle, like let's say we have this kind of pattern, which is called an ascending triangle, where the top is flat. And then, so you've got similar highs and then higher lows. So sometimes we can have a pattern where something might break out and look like it's breaking out, and then it could turn out to be a fake out, and it could come back down, and then it could look like it's breaking out, and then when it comes back to retest, it might not hold. It could come back in. So with an ascending triangle, with any kind of triangle or breakout, some people will want to wait. Now, and some people might say, well, I think that the trend is strong or the market is strong or whatever. Now, a descending triangle occurs where you have lower highs. So you have a high here, a lower high, and a lower high. But on the bottom, we've got similar lows. So we have a low, and then a similar low, and a similar low, and a similar low. And so with these, what might a target be? If we look at the width of the triangle, and how do we measure that width? Well, we might say, hey, this triangle went from here to here. And so let's say that was 20 points wide. Well, when it breaks out, you could say, well, I'm going to take this line, this breakout, and I'm going to add $20 to that, and that could be a target. Now, what could another target be? Well, something we call a swing target. And what is the swing target? The swing target is going to be the previous high. So it would be here. And that's a more conservative target. And some people might say, well, when it reaches the swing target, I might not exit, but I'm going to move my stop up. That's another way someone might use this target, to just say, just in case it doesn't go all the way to the target I'm expecting, when it gets up to the swing target, I'm going to tighten up my exit. Sia is asking, is there a tool to measure the width? And when we go out to the charts, we'll look at that. It's a good question. But you can use the drawing tools on the Thinkorswim platform as, measuring sticks, so to speak. So let's go out actually and look at some stuff on the charts. So if we look at, here's on, for example. Now here's an example of an ascending triangle. So here's a stock that's been downtrending, and all of a sudden we're seeing what? Well, we're seeing a low and a higher low, and then another higher low and a higher low, correct? Are you guys seeing that? So we had our low, and then it's like it just started kind of climbing up, and then it's come back to retest higher low, but the highs have been similar so far. And so if we're expecting this pattern to continue, then one might look for a break to the downside if we're expecting the downtrend to continue. But if you're thinking, hey, this could be a trend reversal, then you'd be waiting for a break to the upside. And so what might you do if you're saying, well, the pattern is still being created. This pattern is still being created. So what do I do? Well, you take one hand and the other hand, and then you sit on them. Or you could say, hey, I don't want to miss this if it comes my way, but if it gets to $46, I'd like to know about it. Or if it goes below this 40.25-ish level, I'd like to know about that too. And so what we could do is we could put in an alert to say, hey, if it comes above 45.88, so we're going to create an alert at or above, let's just say 46. Potential bullish entry. So maybe we might want to buy the stock, or, and how would we measure this range? And then the other alert we might put on here is, hey, if it goes below 40.25, let us know. If it goes below 40.25. And this is a potential bearish entry, where maybe we buy a put or do a long put vertical or something like that, if you're familiar with options. And if you want to see the alerts you've drawn on the charts or put on the charts, you can say, hey, you're coming to your sprocket general saying, show me these alerts. So you can see now we have an alert on both sides. Now, if you don't want to see those day to day, you can, say don't show, and then they disappear. But let's say this had broken out and we wanted to measure a target, we could just come to our drawing tool and say, hey, I want to measure this. Okay, that's about $13.40. And then I am going to duplicate this drawing, and I'm going to come over here, say, hey, when it breaks out, this might be my target here, about $60. Okay. And so that's one of the ways that you can measure. Okay, let's look at another ascending triangle. And in our trading a smaller account, we actually have a trade on this one. We had done an iron condor. So we were expecting it to stay within this range. And what we saw happening, what caused us to think that that trade might be a good idea? Well, it came up to this high once, twice, 3 times, 4 times, 5 times, 6 times. And it came down to this bottom a couple of times also. And so we put on this trade that said, hey, if it stays like below 320 and above 295, we're going to be, we're going to be great. But what has started happening here is we now see, and just let me So we now have this flat top, right? Similar highs, but now we're seeing higher lows. And what do we call it when that happens? Well, that's an ascending triangle. And so this is where, if we were doing a little bit of trade management, we might look at that and say, maybe it's time for us, to close out that trade if we're thinking that it might break out. Ascending triangle. I can't type. It feels like a Monday, but it's actually a Tuesday. Okay. So Brian is saying, how do we know if it's going to break up or down? And the answer is we don't. We don't know which way it's going to break. And that's where the patience is required, right? And so right now we're just being patient. But if you said, well, I see this as an opportunity because it's come down here to this support level and it looks like it's bouncing again. So what might a trader do? Well, you could buy shares and say, when it gets back up to 320, I'm going to sell. Or you could say, I'm going to buy a call, and when it gets back up to 320, you would sell. So that's, those are possibilities that a trader might consider. Or a trader might say, I'm going to wait to see if it comes up here and breaks out and comes back and retests and then takes off, then I'll place a trade. And when did we see something like that happen? Well, if we come back to Dollar Tree, so again, we had a stock that was going sideways, right? Oops, let me get my drawing tool again. So we had a stock that was going sideways, and it kept hitting its head up here. And then it was coming down, and you're not seeing the whole range because this had been trading in this range since last September, and this only goes back to December. So to come down and bounced off this support level around 60, 61 a couple of times. And then what did we see start to happen? We were getting, lower, higher lows. And so it didn't end up coming back down, and it broke out. So, and I'll often post charts like this, it broke out and then it came back to retest, and it didn't come all the way back down, but it came down for 3 days and then started to move. So on this day, a trader might have said, okay, it's been in this trade range since last September. It looks like it's broken out, came back to retest, moving on up, I'm going to enter. And if you'd entered here on this day, you might have said, oh, I missed it. Well, you'd have done not too badly. In fact, it just came up and pulled back and moved again. So some might consider today an entry. And let me just go back a little further in time. So if we look at a 1-year chart, last September 4th, it entered that range and it hung out there for a long time until the middle of April. April 17th, it broke out. And, so if you trade options, when something's going sideways, there are strategies that can work when a stock is going sideways. And then there are strategies that can work when a stock is going either up or down. When we're looking at stock opportunities, often we're looking at stocks that we think will be moving to the upside, which Dollar Tree now is. Now, if we wanted to look at the downside, could we look at something like O'Reilly? And this might turn out to be, not a downside, because this stock has over the last year been uptrending. It's up 15% year to date. But of late, what are we seeing? We're seeing lower highs and we're seeing similar lows. And so that we call a descending triangle. Now, when it's happening during an uptrend, the expectation might be more towards it breaking out to the upside. but a patient trader will wait for confirmation. Say, well, it's still trading, coiling up in this range, and we'll wait and see. How about CVX? So CVX kind of had a great fall, and it's been holding its own. So we're seeing similar lows, but we're seeing lower highs. And so again, being conservative, somebody might want to see it break out above this before they'd consider placing a bullish trade. How about PG? Oh, somebody said O'Reilly's about to split. Yeah, it's a pretty expensive stock. And so with Procter & Gamble, again, we're seeing similar lows, but we're also seeing lower highs. And here's one where, you know, we've been patient, high, lower high, lower high, and this time it comes up, hits its head, and then it breaks through, comes back to retest, and now it's moving to the upside. And so if we're going to measure the width of this, and this is where the art of technical analysis comes in. So some might say, okay, I'm going to duplicate this, and I'm going to make my target from here when it bounced. So I'm going to make my target somewhere around this 181, which is interesting because this swing high, and some might measure from the very tip of the wick. Others might say, you know what, I'm going to look at this previous high from the body of the candle. So I'm going to put it here around this 176.82. And so if you wanted to do this as a trade, how might you trade it? And it's kind of interesting also because next week we're going to talk about consolidation patterns. And what we're seeing here is maybe a double bottom type pattern potentially setting up. And so if your target is this top, even if it stays within this big fat range, you know, you might have a successful trade. So if we wanted to do this with stock, how might we do it? Well, we might say, well, I'm going to make my stop. If it comes back down into this pennant, I'm going to take a look at this low from Friday of 163.48. And I'm just going to use my calculator here. I'm going to take 163.48 times 0.97 and say, hey, if it goes 3% below that low to 158.57, I'm going to exit. And then my target is going to be we're going to just make it 176 is going to be my target. So I'm buying at 167. I've got a target that's almost $10 higher and a stop that's about $7 lower. You know, if I take my calculator and if I say my entry price is going to be 167.25. How much am I risking? Well, I'm risking if my stop is at 158.57, and a stop triggers a market order, it doesn't guarantee that you'll get out. So I'm risking $8.68 a share for the chance to make, if I make my stop 176 minus 167, for the chance to make 876. So it's almost a 1-to-1 risk reward ratio. So we're going to come to our trade tab, and we're going to, I can close these up. We're going to come here to our buy line, and we're going to buy custom with an OCO bracket. And we're going to put in our target, which is 176. and our exit, which is 158.57. 158.57. And we're going to make both of these good till canceled. And we're going to put this in our stocks with targets. And we're going to say entry. This is a note from us to us. Target based on our triangle pattern. Okay. Now, someone had mentioned that they were new and that they would like to see, they'd like to see the entire series right from the beginning. And, you know, I think that's a great idea rather than binge watching YouTube. You could be binge learning. And so this is where you'll want to come to the Trader Talks channel from Schwab Coaching. And there's a button in the bottom right corner that you can subscribe to. And what you'll see when you first get here is whatever is currently being taught or what's up next. If you click on playlists and scroll down to the very bottom, I just happen to know that this is close to the bottom. So here's getting started with technical analysis. And I think Connie already posted a link to this playlist. And they're listed from the beginning on. And I'm doing these little mini sessions on candlestick patterns. We've got the first 6 in there, and I'll show you another place where they're kind of listed more in order. So here's the beginning, the basics, lesson 1, then trends and moving averages, support and resistance, candlestick patterns, and then last week we did flags, and today we're talking, you know, about triangle patterns. And then there's another playlist called the Trade Management Mini Sessions. And I've also put, or our support team, you know, they're the ones that make all this happen. All of these quick videos, like they're between 2 and 5 minutes long on, you know, what's a bearish engulfing, what's a hanging man, what's a hammer. And if you're new to all of this, you'll want to check those out. And then there's a bunch of example trading plans. Those are in blue. And then at the very bottom, there's a bunch of, you know, quick videos on the Thinkorswim platform. Okay, so those are two of the many. And like Connie's teaching a class this afternoon. There's a getting started with stock investing. So if you want to see what's up next or see the schedule, if you come to schwab.com and come to Schwab Coaching and then come to live webcasts, you'll see we're getting close to the end of May. So here's today. So Connie at 4 p.m. Eastern is teaching selecting an options strategy. Up next is swing trading with James Boyd. And if you said, well, gee, I've really enjoyed this, what else, you know, does Barb teach or Connie teach? You can just put in a coach's name also. And you can see, you know, I teach something every day that I'm here. And Connie is close to the same. Yep. So that's another resource. Okay, so shall we look at some more charts? Let me just have a quick look. Can you sort these by dates as well? I don't know that those playlists you can sort by dates. Okay, I think we've got most of the questions so far. Okay, so let's look at some symmetrical charts. So here is J&J. Oops. J&J. Let's try that again. And what kind of pattern do we see here? Well, we see lower highs and higher lows. That makes this a symmetrical triangle, or a pennant pattern. But have we got a breakout yet? No. And so what might someone do? Well, you could place a conditional order, or you could just say, hey, if this goes above 154, let me know. So again, that's, right click, create an alert. If it comes above 154, you could just say place a trade. It's just a note from you to you, place an example trade. I mean, that's what we're doing in this class. But, it's not a note that anybody else is going to see or curate. But now we'll get a notice. Okay. How about Google? Google, as I say, the one with an L. So when we look at Google, we had this series of lower highs and series of higher lows, and then it broke out, came back to retest, and has since moved up. And then, moved up, one day pullback, moving up again today. So could we consider that to be an entry? And, if we wanted, could we just buy the stock and just say, I'd like to own this company? We could do that. And where might we put a stop if we were to put a stop? Well, we might say, I see kind of this here as being a support level around that 163, 164 level. So if I took 164 times 0.97, I'd put my stop around 159. And, and we're buying it at 172. So if we were to buy 100 shares, how much are we risking? Well, we're risking almost $14 a share. Now, and you might say, I don't want to risk $1,400. Well, in this $500,000 account, that would be reasonable. Could we tighten up the stop? We might put the stop, below here. And we could do that too. Some will say, I want to give it a little more room when I first get in because I don't want to get stopped out unnecessarily. And, if it continues to go up and then pulls back, then I'll move my stop up to below here. Okay. So could we just add shares to our account? Sure. So if we bought, say, buy custom with stop, and we're going to put our stop at 159.06. Now, what if you said, like, Barb, I'm just starting out. I've started watching your Trading a Smaller Account class. That's kind of more my speed. I don't want to risk more than $500 on any particular trade. Like, what could I do there? And so where's my just plain old, let's just put this in and I'll put that in just a growth stock group. But could we do something else? And sure, we could do something called a long call vertical. So with a long call vertical, our expectation is that the stock is going to go up. Well, looking at this, is it our expectation that the stock is going to go up? Well, if you're saying yes, it is. And I think it could certainly go above 175 a share. Well, could we come out to this trade tab and say, I am going to buy this 175 call, but it's more than $500. And if I buy that call, I could lose the whole amount. So what I'm going to do is I'm going to buy the 170, sell the 175. And now, that 175, it's going to cap my potential gain, but it's going to limit my risk to $268. Okay, so if I look at that and say, okay, well, what might a target be? Well, your target might be a 25% gain or a 50% gain. Well, if it was 25% and you said, okay, it's currently trading at 265. If it gets to the point where it's worth 330, that's about a 25% gain, or 335. So I'm going to come in here and create an opposite order and say, hey, if this gets to the point where it's worth 335, sell it and I'd like to take my gains. And if it goes down by 50%, I'm just going to watch it. And if it goes down by 25%, then I'm going to exit. And so we're risking $265. The most we can make is $235. What we're saying is, you know, if we could make $70 on that, we'd be happy. Okay. And so we'd put that in our long call vertical group. Okay. So that's an example of both a stock trade and a vertical trade on the same stock. Okay, let's look at some other examples of charts. You know, we've done 3 example trades. If we look at Warner Brothers, are we seeing a breakout here? So we had lower highs, higher lows, and today is it breaking out? Yeah. Now, might some people put a trade on that today? Yes. Might some people wait and see if it's going to come back and retest? Yeah, some might do that as well. Okay, let's look at another one. Let's look at AstraZeneca. That's AZN. And again, you know, and this one is even kind of iffier. Now we have something that has come up several times, right? And hit this diagonal resistance line, so lower highs and higher lows. And today it looks like it's breaking out. But one of the things, and one of the comments or questions that I got today, when I was looking at comments, so if you're watching this in the archives, excuse me, and you have a question, you can just type it in down below. And so one of the questions was, what does it mean when you have a dark green candle as opposed to a white candle with green around it? And so if any of you are newer to candlesticks, what this means, and let me just point this out, is that this candle here, let me get my drawing tools. So this candle here opened here and closed here and closed above the close of the previous day. When it is a dark green candle like this one or today's candle, it opened here, closed lower, but still closed above the close of the day before. And so what we have here is something that gapped on the open and is now sitting right on this diagonal resistance line. And that's a little less, you know, strong than one that gapped open and then just kept on trucking. So far, this one has opened here and it's now trading here. And that's why it's the dark green. And so with that one, you may just want to give it a day, even though we have a breakout of that pattern. You may want to put that on your list and say, I'm going to wait and just see what happens tomorrow. So that's that one. What about INTC? So here's another symmetrical, and it's symmetrical because we have both higher lows and lower highs, and it's bouncing off this support level. Now, can we trade something within the pattern? We could, but we could also kind of wait and kind of see how it goes. You know, and wait for that break if you want to do something that is more directional. Let's look at T-Mobile. And this is one, it's like, I was looking at this and it's like, I'm not quite sure of where to draw the line. You know, and some might look at this and say, well, you know, here are these similar lows. And you may say, well, I don't want to draw the line that far back. But just if we look at the last few weeks, kind of starting back here April 25th. So this has been just barely a month, but we've seen lower highs, similar lows. Today it appears to be breaking out, but it's just peeking its head above. And so you may want to wait. A trader may say, I'm just going to wait and see if it comes back to retest and see if this is actually a breakout, or might it perhaps be a fake out. You know, if we look at Apple, you know, being one of the Mag 7, you know, we've had lower highs here, but now we've got a higher low. And, you know, might this break out? It's still trading in the midst of this range. So, and, you know, we've only got 2 touch points here. So some might say, it might be interesting, but I'm going to wait. Or they might want to put an alert on it. How about Goldman Sachs? This is one that we just did a wash, rinse, repeat on. I'll have to look because I'm, you know, my guess is that many of these, you know, trades are now closed. But did we have, oops, let me trade this. You know, we've had something that's been uptrending here. But really with this, you've got so much white space in here. I don't know if I'd call that a legitimate pattern. You might say, well, if you drew it from here, you'd have a few more touch points, and it's certainly broken above that. You know, it broke above and it's kept on trucking. Okay. How about Caterpillar? Again, some might see this as an, you know, an ascending triangle. You know, if, or a symmetrical triangle here that broke out. And it broke out here, came back, pulled back, and then it's kept on going. Let's look at one more. Let's look at Marvel. So with Marvel, you know, this stock started downtrending. And then, you know, since April 7th, which is when the market seemed to find its bottom, it's been moving up. So we've seen higher lows, but we've also seen lower highs, and it hasn't broken out of this diagonal resistance line. And so what might some people do? Exhibit patience to say, well, you know, this, we do have earnings coming up. And if you hover over this, earnings is the 29th. I'm just going to wait and see which way it breaks. Okay, so we did do 3 example trades today. We did, if we come to our monitor tab, we can see that we did an example of a long call vertical on Google, and then we did a stock purchase example on Google, and then we did a stock example on Procter & Gamble as well. And today has been all about triangles, my friends. So I think we've done what we set out to do. We've, you know, discussed what triangles are. We've explored and looked at a bunch of triangle patterns, and then we've looked at how we might establish a target and an exit by looking at those example patterns. So I appreciate you being here. I appreciate Connie helping out in the chat. My ask as we wrap things up is if you would hit the like button, it helps move this up in the algorithm so more people can find this content. It also lets Connie and I know that you thought we did a good job. So we appreciate that. If you would also hit the subscribe button if you haven't done that already, and then follow us in the land of X, Barb Armstrong CS, and Connie Hill CS. You're off the hook for a survey today, but up next is Swing Trading with James Boyd, and then followed by Connie. So you'll want to stay tuned. Lots of great content still to come. Take care, everyone. Bye for now.